Pound sterling to US dollar edges higher on Friday, reaching the 1.2680s, as traders reduce their short exposure before the weekend. Pound sterling to US dollar claws its way up from intraday oversold levels reached on Thursday when it registered near 2% losses on the week. This came after the US dollar, USD, outperformed due to positive US economic data, the residual effect of Trumponomics, and upbeat comments from the Federal Reserve Fed Chairman Jerome Powell. By rights, the pair should still be falling after the release of weak UK growth on Friday. However, it is possible traders are now judging the US dollar as overvalued. The US dollar index, DXY, which gauges the greenback's value against 6 major currencies, reached a new 2024 high on Thursday, which could be restraining dollar traders' irrational exuberance. Although it seems counterintuitive, the pound sterling, GBP, is actually strengthening despite the release of negative UK gross domestic product, GDP, growth data showing the economy shrank by 0.1% in September. This was lower than the 0.2% expected and 0.2% of the previous month. What's more, in Q3, UK preliminary GDP rose by 0.1% QoQ, decelerating from the 0.5% recorded in Q2 and undershooting the 0.2% estimate. Ordinarily, this would be expected to be accompanied by a sell-off in the pound. However, due to an overbought dollar trade and the market's continued faith in the outlook for growth in the UK, it has not. For advisory service Capital Economics, for example, the data has not materially changed its views on the outlook for Bank of England, BOE, policy or interest rates, a key driver of FX valuations. Lower interest rates are generally negative for sterling as they reduce capital inflows and vice versa for higher rates. Yet, despite the poor economic data, they do not see the BOE cutting interest rates in December. According to Capital's Deputy Chief UK Economist Ruth Gregory, the GDP data means the economy grew at a snail's pace in Q3. However, this doesn't mean the UK is on the cusp of another recession. And while today's data raises the chances the bank, BOE, will cut rates again in December, we are sticking to our view that the bank will keep rates unchanged at 4.75% in December before cutting rates by 25 basis points again in February. Pound sterling to US dollar touches 5-month lows after Chairman Powell remarks. Pound sterling to US dollar is making a slow recovery from over 4-month lows reached on Thursday after US data showed an above expectations rise in factory gate prices, as measured by the Producer Price Index, PPI, in October, and US jobless claims falling below estimates in the week ending November 8, driving the dollar higher and the cable pair to a new low. The two data points are particularly relevant to Fed policy given its dual mandate of keeping inflation under control and fostering full employment. Later in the day, Fed Chair Powell drove the USD to an even higher high after he said that the US economy was in relatively good shape and the Fed would not need to cut interest rates as aggressively as he had previously thought. Technical analysis: pound sterling to US dollar trends lower. Pound sterling to US dollar retreats to support in the mid-1.2600s, a red dashed line in the chart below, and makes a half-hearted stand. However, the pair is in a downtrend on a short and medium-term trend basis, and given the technical principle that the trend is your friend, the odds favor bears pushing prices even lower. Assuming a break below the 1.2630 Thursday low, pound sterling to US dollar will probably start descending to the next downside target at around 1.2613, the late June low's red dashed line. Below that, the next target lies at 1.2500, round number and psychological level, followed by 1.2452, early May lows. The Relative Strength Index, RSI, a momentum indicator, is nearly oversold but not quite. If it enters oversold territory, it will advise short holders not to add to their positions. The longer-term trend, it could be argued, is still bullish, indicating the risk and possibility of pound sterling to US dollar recovering if a longer-term upcycle kicks in. Scope for the pound sterling, GBP, to retest the 1.2630 level. The major support at 1.2615 is unlikely to come under threat. In the longer run, GBP is expected to continue to weaken to 1.2615, possibly 1.2565, UOB Group's FX analysts Kwekser Ling and Lee Su-in note. GBP is expected to continue to weaken to 1.2615. 24-hour view. When GBP was at 1.2710 yesterday, we highlighted the following. although the weakness has not stabilized, downward momentum has slowed a tad. This, combined with oversold conditions, suggests 1.2665 may still be out of reach for now. While our view of a weaker GBP was correct, the lurch lower that sent it to a low of 1.2630 was unexpected. Downward momentum is showing tentative signs of slowing, but there is scope for GBP to retest the 1.2630 level before stabilization is likely. The major support at 1.2615 is unlikely to come under threat. Resistance is at 1.2690, a breach of 1.2715 would mean that GBP is not weakening further. 1 to 3 weeks view, in our latest narrative from 2 days ago, November 13th, spot at 1.2735, we indicated that downward momentum has surged, and the next technical target is at 1.2665. Yesterday, GBP fell and exceeded the target, dropping to a low of 1.2630. We continue to expect GBP to weaken, eyeing a move to 1.2615, possibly 1.2565. We will maintain our view provided that 1.2770, strong resistance level was at 1.2845 yesterday, is not breached.